Yo, what's good, my people? So, today I'm going to be teaching you guys how to scalp trade on the 5 minutes time frame, volatility 75 1s index using my newest, brightest indicator settings. So, let's not waste any time, let's get right into the video once, and for all. So, how do I trade with this my new strategy? So this is not hard. It is very easy at all. It is very easy. Sorry, it's very easy. So let's say you wake up in the morning and you just came to the chart. Oh, I wake up and I want to trade today. So I just come to the chart. What do I look for in the chart? And what do I look for in the chart? And what do I not look for in the chart? How do I buy and how do I sell using this latest volatility 751 index strategy? So let's get right into it. So as you can see, what I'm using is just this first in don't don't bother yourself about my TDI time. We're not going to be using TDI, we're only going to be using these three lines. These three lines are my three moving average. I'll show you the indicator settings once I'm done explaining on how to use it. So the yellow line is the 8 moving average. The red line is the 20 moving average, and the blue line is the 40 moving average. As you can see, on top, middle, and under. So, the yellow line I use it to identify my trend if the market is in an uptrend or in a downtrend. The red line I use it to check for my rejections. Yeah, where the market is going to reject from on my lower time frame, and my blue line I use it for my stop loss to get my stop loss position. Yeah. So what do I do first when I get to the chart in the morning? I go to the 4 hours. That is the first thing I do. Once I go to the 4 hours, I go to the 4 hours to check if the market is above the moving average or below the moving average. If I think that the 4 hours is not compulsory if you don't feel like going to the 4 hours, because me too, I think the 4 hours is a very far time. It's a very far time frame. So you can just as well come to your 1 hour and check, okay, what is the market saying? So currently now the market is in an uptrend. Why do I say the market is in an uptrend? I say the market is in an uptrend because it is above this yellow line. This yellow line is 8 moving average. I told you guys before. So once I get to the market and I see, okay, the market is in an uptrend, what do I do next? The next thing I do is that I go to the 5 minutes time frame. But before I go to the 5 minutes time frame, I want to share a little thing with you guys. If you see that the market is being choppy, like ranging, please stay away from the market, because the indicators can just give you bad signals because the market is choppy. You use these indicators when the market is a trendy market, when the market is fully trending. So yeah, so once I've seen that the market is above this yellow line, the 8 moving average, what do I do? Next thing is that I go to the 5 minutes time frame to look for my entry. You can also get additional confirmation for your most likely for your direction, like for your trend of the market. The additional confirmation is that once you check your 1 hour, you see that the 1 hour is trending up, in an uptrend or in a downtrend. You can come to your 15 minutes and check if your 15 minutes too is telling you the same thing that the 1 hour is telling you. If the 15 minutes is telling you the same thing the 1 hour is telling you, oh, go full margin and blast off. Just go to the 5 minutes and have a fun time, joyride, taking entries. But if the 15 minutes is in a downtrend that is below the line, and the 1 hour is above the line, I advise you to be more cautious. Yeah, be more cautious. I didn't say you should not enter. You can, try to take some entries, but please, and please be more cautious in your entries. So, what do I do? Once I've seen that the market is in an uptrend, like currently the market is in an uptrend, I'm coming. Let me mark the spot where the market entered an uptrend. As you can see, the market cross right here. It's crossed. Look at this place now where I just put my line. The market cross right here. So immediately the market cross this yellow here, the next candle you start entering. You allow the another thing, note, please allow the candle to close above the yellow line before you think of entering, because at times the market can just go up, touch the yellow line, and just reject downwards. So allow the market to cross above or below the yellow line before you start making your entries. So once the market has crossed, you go to your 5 minutes, your 15 minutes, the 15 minutes you enter an uptrend or a downtrend before the 1 hour. So you come to your 15 minutes, you see that the 15 minutes is already up. Note the market is not choppy, the market is in a full-blown trend. So once you've done that, you come to your 5 minutes straight up 5 minutes. Yeah, you come to your 5 minutes straight up and you start looking for your entries. How do you look for your entries? Now, this is one of the parts that is a little bit tricky, but I will help you guys get it the most. I'll help you guys explain it. I will explain it the possiblest way I can. So um as you can see here, the market was, it crossed. So what do we do when we get to our 5 minutes? In our 5 minutes, we wait for the market to get to this red line. The red line is the 20 moving average. Once the market gets there, rejects and closes above it, you enter from the next candle and we put our stop loss below the blue line. Then take profit 1:2, 1:3, 1:4. I advise 1:2 and above, not 1:1. 1:1 is a bad RRO, bad risk management. So yeah, you also have to check too on the 5 minutes if the 5 minutes is choppy or the 5 minutes is trending. As you can see at this place, the 5 minutes was trending, 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 trending. It was trending. Then when we get here, the market was started ranging. So it's becoming choppy, 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 choppy. So all this you just start on the market. You start on the market, you start on the market. See the market start trending again. When you see that the market starts trending, you enter. When you see that the market, note when you see that the market is trending, you enter. If the market is choppy, stay out of the market. If the market is trending, you look for your entries. So the market was choppy until around this area where the market broke out. So as you broke out, the market started trending, 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 trending. You see that the market is trending. So what do you do now? You wait. As you can see right here, you see right here, the market rejected off this moving average, actually rejected here, rejected off this red line. Note the red line is what is rejecting from. Rejected off this red line. Immediately you reject off this red line, you enter in the next candle. You put your stop loss below this blue line. If you put it below this blue line, exactly at this region, it will not stop you out. You put it below this blue line and you multiply it by 2 or 3. Put your take profit somewhere around here. So yeah, as you can see at this region, we can't enter here. Here we can't enter. Why did I say we can't enter here? Because the market is on an uptrend. On the higher time frame is on an uptrend, and we have to follow the trend. So we can't sell. So we'll be looking for our what? Our buy entries. So as you can see right here again. Okay, okay, okay. No, there was no entry there. 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 So what are we looking for? We're looking for spots where we can enter. Spots where we can enter. Okay, I have something for you guys here. Look at why it's good to put your stop loss, because there's no strategy that is 100%. In my channel, I like keeping it real with you guys. So as you can see at this region, the thing rejected here. Rejected here. We're supposed to enter after the rejection and put our stop loss somewhere around here and put our take profit above. But unfortunately, the thing hit our stop loss. That's why you have to put your stop loss always. You have to always put your stop loss. As you can see, this region, the market was choppy, choppy market, choppy market. You stay away from the choppy market. Stay away, stay clear. Don't even allow the choppy market to smell your brake lights. Stay clear out of the choppy market. Market was choppy. It was choppy. It was choppy until it broke out around this region. It was choppy all around here until it broke out. After breaking out, you look for your entry. Look at here, the thing rejected on this red line. Rejected. After rejected, put your stop loss below this blue line. Voila, you move. Look how many pips the thing move. Look at the distance. So that was to do. As you can see right here again, the market became choppy, choppy, choppy. You just start of the market until the market breaks out. That's when you'll be able to enter again. As it was here, it was choppy. You stay out of the market. Choppy, choppy things, choppy. That is ranging. Choppy means a ranging market. You start on the market. It broke out here. Then it came down cross. It came above. It broke out this 20 moving average. Then it came back here, rejected from it here. As you can see, rejected right here. Rejected. It closed here. After it closed here, you enter your next candle. Put your stop loss below your blue line and put your 1:2, 1:3 risk to reward. Yeah, so this is not hard. Let me look for other example. As you can see, the market Went up, it came down, it broke down, it went up again, it came down. The market isn't choppy right now. So went up, it came down, went up, it came down, went up, came down, went up, came down, went up, came down. I'm looking if I can see an entry. Actually, I don't see an entry here where we can enter. So I guess that is it. The video is already 10 minutes long. Let me just show you guys in indicator settings. So yeah, you copy your moving average, main indicator windows, 40 moving average, the 20 moving average exponential. Before I show you guys the last moving average, please, this is your first time on my channel, do like and subscribe. And if you have any question, if you don't understand what I taught today, just comment down below, and I'll try to explain it in my next video very well. So the last moving average, 8 moving average. Yeah, I'll see you guys in my next one. Cheers.